It's good to see you, Anthony. I definitely want to talk ETFs, but I feel like we have to start on the stock move today and the SoftBank news, which is sort of overshadowing things. What do you know about this sale? Why?
Yeah, I really can't comment on SoftBank's decision to drive liquidity. Obviously, they reported results yesterday, and those results speak for themselves, as do SoFi's results. We had a record quarter again. We've been able to deliver record revenue for the last 4 quarters in a row, growing 50% year over year, really strong positive EBITDA, doubling sequentially. Our first GAAP profitable quarter for the bank, SoFi Bank, that we opened up in our first full quarter there, and really strong growth in members and products, both accelerating. And then what often gets overshadowed is our technology business that also accelerated in Galileo. So we had a really strong quarter across the board in terms of our financial performance, our operating metrics, really validates our strategy to be a one-stop shop and driven diversification of our business. So I'm really proud of what the team's accomplished, and that's really what we can talk to, and those are the facts.
Do you have any indication of whether SoFi is going to sell more, or SoftBank's going to sell more of its stake and get out of the name?
I do not. All I know is what the rest of the public knows, which is what was in their public filing about the results and the losses that they generated. And you know, investors have a lot of different needs for liquidity, and that may be tied to their decision. But I don't have any other information than that.
No, it was a doozy. More than $20 billion loss for the Vision Fund, one of the worst quarters ever. So let's talk about your announcement today. ETFs, not a huge revenue driver for you. Is it growing? Do you have plans to change that?
We know it's a really critical element to our strategy. So we want to be a one-stop shop for all of your financial service needs, whether that's buying a home, paying for college, investing, using a checking or savings account, a credit card, or insurance. And we're the only digital platform that offers you the ability to buy, save, spend, invest, and protect. But in each one of our individual categories, in this case, the invest category, we also want to differentiate based on selection. And within invest, we think there's an opportunity to be a one-stop shop to give our members access to investing at an earlier age. And so we've done a number of things since we launched Invest to give great selection, but also access to Americans that typically haven't accessed investing at a very young age. We launched with single stocks without commissions. We pioneered fractional shares. We launched 4 of our own SoFi ETFs to give our members an opportunity to invest in a diversified portfolio, like an S&P type of index in SoFi SFYX, the ability to buy 500 diversified companies at a $10 price point so they could diversify their investments and dollar cost average through recurring investments. So what we're adding here today adds the additional selection. So we'll now have 8 SoFi ETFs. So we know our members can invest in Web3, the decentralization of the internet. And that's why we came out with T-Web, in addition to the emerging new technologies and energy. And that's why we came out with Smart Energy today. 2 new themes for them to invest in a diversified way, in a responsible dollar cost averaging way.
The T-Web one, I find the timing a little bit interesting right now, just given the fact that the market has soured on a lot of these themes, blockchain, the metaverse, NFTs, which is what this ETF is all about.
Yeah, one of the things that we've seen over the last 3 decades in investing is that the emergence of new technologies, of emerging companies, goes through a boom, bust, boom cycle. And so it's very clear that blockchain is not going away. It's very clear that cryptocurrency is not going away. Big data is not going away. The metaverse isn't going away. NFTs and tokenization are not going away. Yes, there was an overvaluation of those assets. They've come back to reality. The market's trying to figure out what's fact versus fiction. They're trying to figure out what are the real sustainable businesses, what aren't. The benefit of an ETF that cuts across those 4 themes that I just mentioned in T-Web is that it gives you the ability to actually diversify your risk by investing in this ETF, as opposed to 1 or 2 companies or 1 or 2 cryptocurrencies. And so these companies fall into those 4 thematic areas in a diversified portfolio under the ticker TWEB. And that comes at about $20 a share. So it allows you to get started if you want to invest in that theme at a low price point in a diversified way. And of course, you want to invest over the cycle, set up recurring investments you can do on our platform as well, and invest every week or every month, so you're dollar cost averaging into the portfolio.